Welcome back. Today on the Byte-Size Brief, we're going deep on Robinhood, ticker symbol HOOD. Now, if you still think of them strictly as that controversial zero-commission app from the meme stock era, you are missing out on what is arguably one of the most aggressive and fascinating corporate pivots happening in finance today. I'm going to walk you through this like a one-on-one financial tutorial. We're going to completely look past the headlines, dig into their actual data, and break down exactly why this company demands your attention right now. To truly understand Robinhood's current strategy, we have to start with the big why. And that why is a staggering number, $90 trillion. Just take a moment and let the sheer scale of that sink in. Over the next 10 to 20 years, we are going to witness an unprecedented intergenerational wealth transfer. The massive amount of wealth currently held by the baby boomers and the silent generation is going to be passed down to Generation X, Millennials, and Gen Z. This transfer is, without a doubt, one of the most certain structural events in the global financial industry. So Robinhood's core mission right now isn't just about giving you a slick interface for day trading anymore. It's about fundamentally positioning their platform to become the absolute default destination for where that $90 trillion ultimately lands. Here is our roadmap for today's explainer: the new Robinhood, evolving the business model, recent strategy upgrades, the bull case for capturing wealth, the bear case regarding advanced trading limits, and finally, the future roadmap. Section 1. The new Robinhood. Honestly, nothing captures this ambitious shift quite like this recent quote from Robinhood's CEO Vlad Tenev. He stated that the ultimate goal is to build a family office in your pocket. Think about that analogy for a second. Traditionally, a family office is a private wealth management firm that serves the ultra-high net worth. We're talking people who need a dedicated team to handle everything from daily spending and generational trusts to retirement planning and complex private equity allocations. Tenev wants to take that highly exclusive experience and democratize the entire suite of services. They no longer want to be just the app you use to buy a couple of shares of a tech stock. They want to manage the entire financial life cycle of a family across multiple generations. To actually pull this off, Robinhood has been rapidly rolling out products to become what we call a full asset platform. Just look at what they've added to their ecosystem recently. You've got high-yield checking and savings, retirement accounts with some pretty aggressive percentage matches, custodial accounts for minors, trust accounts, and even credit cards. This is a very deliberate strategy of bilateral penetration. On one side, they're capturing young users really early in their financial journey. But on the other side, by introducing robust trust and retirement products, they are actively attracting the older generations, the parents and grandparents who currently hold the capital. They're laying down the plumbing today so that when that generational wealth handover happens, the money naturally migrates within the Robinhood ecosystem rather than bouncing out to a legacy bank. Section 2. Evolving the business model. If we look at their old model, it was largely driven by what you could call entertainment finance. Revenue was heavily dependent on transactions, specifically payment for order flow generated by active retail trading and speculative activity. Basically, if users weren't constantly buying and selling, Robinhood wasn't making as much money. But the new model is entirely different. It's about intelligent asset management. By unifying your spending, your high-yield savings, and your long-term allocations all in one single place, they are aiming to become the default destination for your wealth storage. In this new model, they generate significant revenue from net interest margins on the cash you just park with them, acting much more like a traditional bank. In fact, checking the latest data from Q1 2026, while transaction-based revenue is still a factor, their net interest revenues have climbed significantly quarter over quarter. Now, you do have to watch their operating margins, which actually saw a slight compression recently because of the heavy marketing spend required to attract these new advisory assets. But the ultimate defensibility of this model relies on making the user feel like withdrawing their funds to a competitor is actually a financial disadvantage. They want you to feel like leaving means losing a high interest rate or leaving a juicy retirement match on the table. And if you think this is all just theoretical, the actual user data from their recent reports tells a different story. Currently, a massive 40% of user assets on Robinhood are held in passive products. We're talking broad ETFs, parked cash, and retirement accounts. This completely debunks the mainstream narrative that Gen Z and Millennials only use the platform to gamble on highly volatile assets. What we're actually seeing is a barbell approach. Users might have a portion of their portfolio set aside for active strategic trades, but they are simultaneously using Robinhood to securely allocate a huge chunk of their net worth into long-term passive growth. Section 3. Recent strategy upgrades. A cornerstone of their technical roadmap right now is asset tokenization. Put simply, this is the process of taking real-world assets, like stocks, bonds, or private equity, and creating a digital token representation of them on a blockchain. Robinhood views this as the single biggest capital market innovation in over a decade. And the value here isn't just about trading stocks on a blockchain, because it sounds cool. The real value is bridging centralized finance with decentralized finance. If an asset is tokenized, it can suddenly trade 24 hours a day, 7 days a week on a global scale. Plus, it allows traditional assets to participate in decentralized financial activities, like automated lending and collateralization. Robinhood is already testing this heavily over in Europe, offering eligible users tokenized shares of private space and AI companies. To actually deliver this tech without scaring away the average consumer, Robinhood is adopting a structure that some in the industry playfully call the financial mullet, which is pretty fitting. It means keeping the highly regulated, clean, and compliant user interface in the front via the Robinhood app, but in the back, the heavy lifting is done by DeFi infrastructure, specifically through their newly developed Layer 2 network Robinhood chain. This dual-driven ecosystem is honestly genius. It safely brings everyday retail users into the efficiency of on-chain activities without forcing them to understand the absolute headache of crypto wallets or network gas fees. Section 4. The bull case for capturing wealth. The bull case for Robinhood heavily relies on this number right here, 19. That is the average age that a Gen Z user is opening their very first retirement account on Robinhood's platform. Compare that to previous generations, who typically waited until they were 25 or even 30 before they even started engaging with retirement planning. This absolutely proves that their youngest demographic is highly aware of the need for long-term investing. By successfully onboarding these users at age 19, Robinhood is securing decades of lifetime value. They aren't going out trying to acquire a 50-year-old traditional banking client. They are growing with a 19-year-old who will eventually become a 50-year-old millionaire. The second major pillar of the bull case is their aggressive move to solve a huge structural inequality in finance, which is private market access. Currently outdated accredited investor rules basically shut roughly 80% of everyday people out of investing in private companies. But through initiatives like Robinhood Ventures, they are securing pre-IPO allocations in massive growth companies. We're talking about heavy hitters like Stripe, Databricks, SpaceX, and Anthropic. Step by step, they are allowing retail investors to indirectly participate in these private rounds before the companies ever hit the public market. This offers a highly unique value proposition that legacy brokerages are simply not providing to the average retail account. Section 5. The bear case regarding advanced trading limits. To really grasp the risk here, we have to look at the recent sentiment from active options traders, specifically those trading 0 days to expiration, or 0 DTE contracts, which have just exploded in popularity. When you put Robinhood side by side with competitors like Moomoo or Webull, a very clear pattern emerges. Robinhood's user interface is undeniably clean and fast for mobile entries, but it fundamentally lacks the complex tools needed for advanced derivatives trading. Competitors allow traders to compare multiple expiration dates on a single screen, utilize automated trailing stops to lock in profits during high volatility, and they offer deep analytical tools like strategy simulators. Robinhood, on the other hand, forces users into pure manual clicking, and during a volatile earnings week, manual clicking can result in profits vanishing completely before a human can physically react. This highlights a very tangible threat to the platform. Robinhood excels at rapid, frictionless entry. It's easy. But as traders advance in their skills, they are actively migrating to competitors to get those deeper analytics and automated risk management features. Here's the core issue. If Robinhood focuses entirely on this new family office concept and passive wealth gathering, they run the very real risk of alienating their heavy volume active day traders. And while passive assets provide stable yields, you have to remember those active day traders are the ones generating the massive transaction volumes that still pad the company's bottom line. This tension poses a fascinating question that Robinhood's leadership is wrestling with right now. To bridge the gap between simple interfaces and complex trading strategies, will AI manage your money? Can they deploy AI agents that run complex automated risk management strategies in the background, which would allow the platform to remain visually simple while actually performing at an institutional level? Section 6. The Future Roadmap. Looking at their development pipeline from where we sit today in late April 2026, here is what to watch for. Over the next 6 months, expect the launch of Robinhood Social and integrated prediction markets. Management genuinely believes that user-generated content, combined with actual financial skin in the game, creates a powerful truth pricing mechanism for real-world events. Moving out to a 2-year horizon, they see the industry fully adopting 24/7 year-round trading markets. The technology is essentially ready to go. It's just about engineering integration at this point. And looking 5 or more years out, the ultimate milestone is achieving regulatory clarity in the US. Once the rules are clear, they fully intend to bring that European pilot program stateside, allowing everyday retail access to tokenized private equity right on-chain. Which brings us to our concluding thought for today. As Robinhood actively evolves from a simple stock swiping application into a full-scale AI-driven family office, Will the traditional legacy brokerage model even survive this $90 trillion wealth transfer? Or are the established financial institutions about to be radically disrupted by the very platform they once dismissed as just a fleeting trend? The stakes literally could not be higher. That wraps up today's deep dive explainer on Robinhood. For a sharper, more candid discussion, make sure to join us on the full audio explainer. Drop your questions and your hottest takes in the comments below. We really do read every single one.